Today's Friday, September 29th, and the stock market will be opening in a little over 3 hours. But this is a chart review of the E-mini S&P 500 futures contract. And as of the time of this recording, the futures is quoted at 4,358 and a half. And since trading started last night, the futures is up 21 handles. So this is the chart layout at the 2 hour time frame. So each candlestick represents 2 hours worth of trading. So a couple of things I'm showing here. The purple horizontal lines are, from my perspective, reasonable or local support and resistance levels. The first being 43.73 and the one below that 43.05. The yellow line running down this chart is also a trend line for support and resistance as well. So heading into late last week, price has been stair-stepping to the downside. So we have a high, we have a lower high, we have a lower high. And then when price broke below 43.05, the market started buying back into it to the point that price ran right back above 43.05. And the past 2 days, here there was a consolidation phase where price had a difficult time breaking back above the yellow trend line. However, price subsequently did manage to break above that. And heading into the overnight session, price is still running to the upside with the probability of retesting 43.73 in today's trading session. However, I'm anticipating that price will be rolling back to the downside heading into the open at 9:30. So what I did was I took a short via option contracts, specifically option contracts that expires at the close of today's trading session, September 29th. And relative to the spot price of 43.60, I took the 43.40 target price. So essentially what this trade is saying is that on or before the close of today's trading session, I'm anticipating the S&P 500 will be at or below 43.40. And because I bought options, I'm on the put side. That's what the P is standing for. And when I entered this position, the S&P 500 was quoted at 43.57 and a half. So of course the trade is going against me, but it's still early. We might see that retest of 43.73 heading into the open and then getting rejected possibly for this pullback and retesting the yellow trend line, which is approximately 43.40. That's the rationale for that specific strike price. So what I'll do is I'll switch over to the option chart for my specific contract. So just hold on. So this is the chart layout of my specific option contract as shown under the ticker. This is involving the 43.40 put. And right now the premium is quoted at $7.75. So the trade is still going against me as I bought into these contracts at $8.75. And if I open up show trades, here's I picked up 6 contracts at $8.75, and right now the premium is quoted at $7.75, so the trade is going against me. So with that, if I open up Active Trader, my entry price is right here, as identified by the 2 yellow arrowheads, $8.75, and that was also on the trade bubble, and the zero line is pegged to $8.75. So the y-axis is reflecting the profit and loss as the trade progresses. So as long as the S&P 500 continues increasing, then that has a negative effect to my option contracts. So the price or the premium will be decreasing. And if I do not close this trade out, my max loss is $262.50. And how this is quoted is that, as shown up here, the minis, the mini S&P 500 is 1/5 the actual size contract. So the multiplier is 5. So my entry price is right here, $8.75. So it's 875. Multiplier is 5 because this is 1/5 of the contract. So one option contract is valued at $43.75. I picked up 6 contracts as shown right here. Net position is 6. So the multiplier is 6. So the cost is $262.50, which is what the full max loss is if I do not close out this position before it goes to 0. So of note as well, right here, the DXY, this is the dollar index. So for the past few months, the dollar has been on a rip to the upside, and it was as high as 106.75, I believe, heading into Thursday. So it's pulled back a bit to the point that the stock market has benefited from the dollar weakening over the past few hours. So, however, I'm still bearish on the S&P 500, but that's the current status and the rationale for my position. So volatility and volume should be picking up as we head into the stock market open in a little over 3 hours from now. So what I'll do is I'll pause it here. I'll do another status check, possibly heading into the open. If not, I'll do one before I close this trade. Ideally, I'd like to close this trade out as high as possibly can, but I'd like to close it out like 42.25, and then the profit potential is a little over 1,000. Anything greater than that, then that would just be an extra bonus. So this was a high risk trade as well because these contracts expires in at the end of today's futures market, which is at 5 p.m., 1 hour after the stock market closes. However, I hope not to hold this position that late into the trading session. I'd like to see the volatility kick in, possibly heading at the open, and hold on to this for a few hours for that potential profit. So I'll pause it here, and I'll be back. So it's been a few hours. The stock market's been open for a little over 30 minutes now. And this is the current candlestick right here, the 2 hour. And there's a major battle going on because at the open, price dropped all the way down to about where I entered this trade and has been bouncing around. Also, as I was speculating, price was going to run up and retest 43.73, which it did. Could this get rejected right here? But another update is the actual option trade. So unfortunately, the trade is going against me as the premium is now quoted at $3.50. And as price was dropping, I did add to the position. I'm currently holding 8 contracts, and the premium altogether, if this was a total loss, now at risk is $310.75. So if this move continues a little lower, I think I'm going to close it out at like $1.50. It's not going to be much. At $1.50, I'll be still. It would have been a loss of $250. Anyway, I still think it's still early in the day. Taking a look at the dollar's back above 106, so that's a good sign. But still, it's still early in the trading session, so I'll give it another few hours. So we're now heading into the afternoon session. So it's a little after 1 o'clock. So as I was anticipating, price has broken below the trend line, and is now approaching 43.05 is the next local support level. I do have an open order sitting slightly below that to close out this position. So this is the current status of the S&P 500 futures. So there's not much time remaining. There's a few more hours before the futures market closes at 5 p.m. So there's like 3.5, 4 hours left before this trading week ends. So what I'll do is I'll switch over to the option chart. So this is the option chart, and you can see here that the premium is now quoted at $20. The bid is actually $18.25. So if I was going to close this out, I would be selling the bid. So here's my open order sitting right here, and if I open up Active Trader, the position, if I was to sell it, is up 439 at this point. So if I was to close it out, so if I scroll up, my order is sitting at 31. So the reason I picked 31 is that my entry, if I scroll down, is 775. So the rationale is 775 times 4x risk to reward. There's my strike, or there's my price to close out this position at 31. So yeah, so then I'll pause it again. So the next update will most likely be the last. That's if I do get closed out at my open order of 31. However, I'm going to keep a tight watch on this, because if price does come back down, I want to close this out at least on a profit side. I'll most likely close that at $10. So I'll set alarms for that as well. So for the purpose of time, I'll pause it again, and I'll do one more update in a few hours. So this is a final update. It's a little after 3 p.m. This is the new candlestick that started trading at 3 o'clock. The last candlestick showed a strong rally back to the upside, and because of this move to the upside, I got stopped out. And of course, what's going to probably happen is that price is going to come back down and retest, or possibly head towards 43.05. Considering that there's not that much time left in the trading session, I don't mind getting stopped out. It's unfortunate that it didn't meet my target. However, based on my assessment, I was able to identify this potential move to the downside and subsequent break below this trend line. I'm gonna continue tracking the S&P 500 into next week, but it looks like there's gonna be, from my perspective, a bit more of a downturn carrying over into early next week. However, that could change Sunday evening when the futures market restarts trading. So what I'll do is I'll switch over to the option chart. So right here, as price was going in my direction, and then that last candlestick just closed, was unfortunate. So if I open up Active Trader, I don't have a position here anymore. It's zeroed out. Net position up here is as well as showing 0. However, if I show trades, yeah, so here on this candlestick, this is where I bought the 8 contracts. It averaged out to $7.77 approximately, if you round up. And on this candlestick, this is where I got stopped out at $17. So this was almost a 2-to-1 return in risk, which is good. I mean, I was kind of getting bullish on the downside, but unfortunately, again, it didn't meet my strike of $31. But again, due to the fact that the futures market and stock market will be closing in less than an hour, it's okay that I do get closed out. So what I'll do is I'll provide a screenshot of the breakdown of the profit and loss. Somewhat disappointed, but again, going back to the chart, I was able to identify that pullback. Considering the strong move to the upside yesterday, it may have fooled a lot of retail traders thinking that there was going to be a bullish going into Friday session, but unfortunately that was not the case. So I'll end it here, and until the next setup, I'll see you.